you're paying interest, it works the same way. So you got to decide whether you're an owner or a loaner. Okay, that's the major difference. Okay, and when you take a look at right here, let's just take a 19-year-old. Okay, remember back that far?
Yeah.
Marie, remember back that far? Okay. See, I got to go back a little further. Okay, me and Kevin and Doug, we got to think back. Okay, ways, right? When you take a look at this, a 19-year-old, if you gave $2,000 one time, and what's the significance of $2,000? That was what the IRA was. Okay, individual retirement account. Okay. Now, if you did that, you put your take your 3% you can receive on your money. Now, where can you receive 3%?
Local bank.
Local bank, right? Any brick and mortar bank. And why do we put money in the bank? Because you asked your dad, "Hey, Dad, where do I put this money?" He said, "Go put it in the bank." Right? That's what I did. Okay. And guess what? At the end, guess what? My dad was one of the 95%ers. Okay. So then, guess where I would end up if I continued to listen to that? Does that make my dad a bad guy?
No.
He just didn't have the education. My dad was ignorant. Okay. Now, when you take a look at it, does everybody know the difference between ignorance and stupidity? First time my dad called me ignorant, okay, I was crushed, right? I was like, oh, he called me ignorant, right? Because I was thinking it was stupid. No. Ignorance is you make decisions without the facts. Okay? Stupid is when you get the facts and you still make the same decision or refuse to make a decision. Okay? That's stupid, right? Does everybody know that? Yeah. All right, so when you take a look at it, if you got 3% at the bank, divide 3 to 72, how many years is that?
24.
You can cheat. It's right there. Okay, it's 24. Okay. Now, see, when you take a look at it, if you were 19 and put $2,000 away in, every 24 years your money doubles. So at 43 it doubles to 4. At 67 it doubles to 8. Who's excited about $8,000 retirement? Anybody? By that time it'll be, a loaf of bread, a gallon of milk. Yes.
Yeah.
Okay. Well, you certainly can't retire on that. Okay. But does anybody in this room have a loan or a credit card that's at this rate? No, you'd like your debt to accumulate that slow, but not your money, right?
Right.
Okay? Well, if you double the interest rate, if you could get a little more educated, Bryce,
right,
and double the interest rate, what does your gut tell you that would happen to the end result? At a minimum.
More money.
It'd be more money, but at a minimum, do you think it would double?
Yes.
Yeah.
Okay? Because you're doubling the interest rate, right? Now, take a look at this. Watch what happens. You actually double the doubling periods. You go from 2 doubling periods to 4 doubling periods, and you actually fourple your money. It's New Jersey terminology, okay? I come from the East Coast, all right? So you fourple the money, right? Is 32 better than 8?
Yes.
Every time. Not every other time, right? But every time.
Right.
But see, it's still not significant enough for you to retire, correct?
Right.
Correct.
Well, see, what you take a look at here is this is where you are a loaner. You're loaning your money to financial institutions, and they use it. You understand financial institutions, banks, credit card companies and stuff, they don't have their own money, right? They're using yours.
Yeah.
Right? Okay? And what happens there is you're going to get a chance to see. Is it safe to assume that banks and financial institutions are receiving at least 12% on their money?
Yes.
They sure are.
Particularly if you factor in late fees and anything else like that, it's more like 200%. Okay? But if 12%, what happens if you put the 2,000 to that? Give me a guesstimate, Bryson. What do you think the end result's going to be?
It's going to be 64.
Maria, what do you think? 64, right? Okay, watch this. It doubles and 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 doubles to $512,000. Holy crap, right? I mean, is that unbelievable? $500,000. So look, Bryce, let's just say that your bank had a 12% credit card, which you know they have a lot higher than that, right? And they take your $2,000, right? They loan it out to Kimberly at 12, and they ended up with $500,000 at age 65. They give you the difference, and they keep $504. Hey, I'm not even greedy. Give me half. It's my money, right? Okay, but is that reality?
Nope.
No. Why? Because they're the owner of the money. It's yours, but they own it. You loan it. Okay? See the difference? You actually are in the finance business. You didn't even know it. You're loaning your business to the banks. That's the reason that 5% succeed and 95% fail. That's just one of them. Okay? Now take a look at this. What we talk about is a risk-free opportunity. Who likes risk-free?
Okay.
Everybody likes risk-free. Who qualifies for risk-free? Everybody qualifies for risk-free, right? You take a look at Kimberly, she made me talk about that a little bit. But, a single mom with 3 kids, would you agree that they can't take any risks?
True.
Okay? No major investment. I like that one even better. I said, hey, I got that. Right? I got no major investment. Woo! I was in, okay? No franchise fees. You understand if you go get that small business to a franchise, and why would you buy a franchise? Because you want someone else's logo?
Yep.
Or you want the proven cash flow system?
Proven system.
That's why you do it, right? But then you got to pay monthly fees for that, annual fees for that, startup fees for that, all that kind of stuff, right? No loss of job security, no experience required. All right? We're in the mortgage business, right? Do you have any mortgage experience, Maria? Good. We're not even going to hold it against you if you did, but we're glad that you don't have any. Because then we don't have to untrain you and retrain you. Bryce, you have any mortgage experience?
No.
Other than maybe your own mortgage, right?
Yeah, just my own.
Okay? See, that's cool because then you don't have to quit your job. As a matter of fact, we don't want you to. This is how we want you to do it. We want you to learn a new career, okay, that you can earn unbelievable money in, but we want you to do it with no stress. We want you to be able to pay your bills with what you do right now, and then we're going to show you how to make a transition. So when you're making as much or more part-time with us than you do full-time, then you make the decision. If I put more time in, or if you're just really lazy, you say, hey, I've already replaced my income, I'm going to work half-time instead of full-time, okay? That's up to you, though. Would you agree?
Yes.
But that's your choice. Isn't it good to have choices?
Sure.
No inventory, okay? We don't have any inventory. It's not totally true, okay? The banks have the inventory. This is an $8 trillion industry. Trillion, okay? You probably remember that number from school, right? Okay, about $8 trillion industry. You think that there's a few bucks to be made in an industry that big?
Yes.
It's the largest one, by the way, okay? Unlimited territory and opportunity, which simply means this. Bryce, trick question.
Okay.
Do you know anybody who doesn't live in the state of Arizona?
Do I know anybody who doesn't live in Arizona?
Yeah.
Yes.
You know somebody from another state?
Yes.
Name a state. Anyone.
Minnesota.
Minnesota. So you know somebody in Minnesota, right? Okay. So how cool would it be that you talk to them? Who's this person, by the way?
Family, grandma.
Okay, grandma. You talk to grandma. Hey, grandma. And guess who grandma knows? Everybody, right? Does grandma like you?
Yes.
Okay, good, right? So then chances are she would help you build a business?
Yes.
Okay? So also you say, hey, grandma, look, I'm getting into the mortgage business. I'm getting into banking and finance. If you know anybody that needs to refinance a loan or is buying a house, okay, or even wants to get into the industry themselves, I'm the guy that you need to call. You think grandma would do that for you?
Yes.
Unless you really pissed her off, she's going to help you, right? Okay? But see, you get a chance to do that. And by the way, you never even have to go there. But now if you decide to take a trip back to Minnesota to see grandma, because you probably do, so if you guys have a good relationship, and that becomes a tax deduction.
Right.
Because it's a business. You know anybody in a different state?
Yeah.
What state?
Chicago.
Chicago, right? You go to Illinois. Well, it's same thing, right? You go back there for the summer or whenever you like to visit, because, you know, it's a little cold in the wintertime, okay? You go back there, guess what? Same thing. You can write that off. But if you have friends and relatives there, aren't they going to refer you if they know what you do is right?
Yes.
Absolutely, right? Otherwise, they're probably not your friends, so you need to reevaluate, okay? So let's take a look at this. So work towards ownership. Ownership is the key, okay? If you've been working at least 5 years of your life,
Oh, yeah.
absolutely, right?
Yeah.
So if you decide to leave tomorrow, let's just say all of it was in one job.
Yeah.
You decide to leave tomorrow, what do you got?
Nothing.
Nothing. Whatever's residual left of your paycheck,
Yes.
maybe a little 401k.
Right.
True? Okay. Well, what if you worked 5 years with Nation's Funding Source, and then you say, hey, Doug, I'm still a young guy. I want to call it quits. I want to retire. Okay. Doug can actually buy your business from you because it's something you've built. How cool would that be?
Very cool.
Okay. Think about it, right? Then you could sell it. You could do, I don't care how you work it out, lump sum, monthly, just so it comes out like a pension to you, it doesn't make a difference. So how big you want to build it, how much you want to have coming to you is entirely up to you. Maybe he says, well, Doug, as a matter of fact, I rethought it over. I don't want to do it now. I'm going to do it a year from now. Okay, because I want to get to a certain income expectation. Okay? Whatever it may be, that's his business. Okay? God forbid, do you have a family yet?
No.
Okay? But if you did, do you think it would be important to them that if you invested time and energy, something came out the other side?
Sure.
So God forbid you should die.
Yeah.
They would continue to get paid. Would that be valuable to your family?
That'd be good.
Think about anybody that knows anybody whose parent had passed away, the breadwinner, and they had some struggles, right? What if they had ownership in what they were doing? And by the way, do you work harder for you, or do you work harder for somebody else?
For yourself.
Folks, you know it, okay? The reason why America has some challenges corporately is because of this, okay? You know that there's a ceiling. You know that there's certain issues. So you know what happens? You work hard enough just not to get fired, and they get back at you by giving you just enough pay so you don't quit. Yes or no?
Yeah.
See? Who wins on that? Nobody, okay? So take a look at this, the American dream. What is the American dream to you? American dream to me is freedom. Okay? Do you think that people are squeezing through the fence to get into Mexico or out of Mexico?
Out of
Yeah.
Out of Mexico. Why? Because they want to own their own home. They want to own their own business, right? To control their own destiny. Who wants to control their own destiny? You know there's many other countries you can't even own a home. They don't let you own property.
That's right.
True? They certainly ain't going to let you open up a business. True? See, here you get a chance to do that. And with Nation's Funding Source, take a look at this. 65% of renters can be homeowners. That means that 2/3 of the people that are out there renting a house actually could qualify to own one. Now, if they qualify to own one, Maria, and you know there's tax advantages in owning versus renting, right?
Oh, yeah. Right up.
Why do you think that they're still renting then?
Because they don't
Probably don't know about it.
They don't know that they qualify.